Hey everyone, it's Nick. In this video, I want to break down 3 of the most horrible, painful, frustrating paradoxes that I've learned over the course of the past nearly a decade, having made millions in Forex, crypto, and stocks. And the painful part about this is you're going to learn about these things one way or the other, whether or not you hear it from my video here today, or whether or not you learn it on your own. I just figured if I could save you a little bit of time, then making this video might be able to help you avoid these types of traps. They're mainly just thinking traps that come with improper expectations. So there's 3 of them I'm going to cover. These are the ones that I think are the most important. So let's jump right into it. The first one is the more you trade, the less you earn. I want you to think about this for a second. Whenever you're trading a lot, there's a couple things that are true. For one, you're having to spend a lot of time looking at the charts. You're spending a ton of time. Right? So some people will obsessively look at charts maybe around 12 hours per day, just checking every 5, 10, 15, 20 minutes. And this involves a lot of time involvement, of course, right? So that's the first thing, is you're investing a lot of time. And you're investing a lot of time, and it doesn't necessarily guarantee that the more time you spend, the more money you're going to make. Another component as a part of this is quite obvious when you think about it, but you're also going to be paying more fees and commissions. You're going to be taking way more trades that might lead to lower quality decision making. You've obviously heard the thing where, quality is better than quantity in a lot of cases. There's no exception here in Forex trading. It's not an exception to the rule. Whenever you're trading, quality is way more important than quantity. Right? If you could take one really solid trade per week that you thought had a very high probability of winning, and you risk a lot of money on that one trade, you're essentially targeting your decisions and you're focusing all your energy on that 1, 2, 3 good trading opportunities per week instead of taking like 100 trading opportunities per week that may or may not be quality trades, right? A portion of them surely will be, but there might be a very large portion of them, perhaps even the majority of those 100 trades you take throughout the week, that prevents you from really being able to exercise a lot of your experience, your intuition, your discretion to make good trading decisions. So what I'm saying is that the quality of your decisions generally lowers as a result of you looking at a bunch of different stuff and taking a bunch of trades. Now, another thing associated with this is the fees, the commissions, the swaps, the spreads. You're having to pay spreads, right, as prices like it's generally 1 or 2 pips if you're with a broker that has pretty small spreads. All this stuff really adds up. So you're taking more trades, lower quality decision making. You're getting a worse return on investment on your time because the more time you spend, even if you make the same amount of money, you're making less money per hour whenever you average it out as compared to if you just spent 15 to 30 minutes per day looking at charts like me. I might spend maybe an hour to an hour and a half a day looking at charts in total, but then again, I do this full time. This is literally like all I do. I trade, I help people learn how to trade, and then I have to walk my dog, and sometimes I even take care of my wife. Aside from that, I spend very little time trading relative to what I think a lot of other people are trading. And then on top of all this, you're subject to all the fees and commissions and swap fees as a result of taking a bunch of trades. So I think that if you understand that the more you trade, the less you earn, when you really understand this, what you start doing is you start waiting for trading opportunities that present a very good risk structure. If you watch my other videos here on my channel, I literally break down the entire way I trade. I show all the dynamics. I show everything step by step. And there's not really a lot of decisions, right? I mean, if you're keeping things incredibly simple and then you're just ensuring that you're controlling risk for every single trade you take, then the more you trade, the less you earn. But the less you trade, the more you will earn. And even if you're making the same amount of money trading less than you would be trading a lot, what that means is that you're making a ton more money per hour of your time spent looking at charts, right? Oftentimes a lot of people say is you're going to lose so much money in your first year, like maybe 1 or 2 years of your trading journey. And the reason this is not just because you lose money financially, but you lose time. You lose that valuable time. And when you're losing that valuable time, it is a direct component, like it's a direct input of your cost per hour. So for example, how much do you get paid doing whatever you do right now? Maybe you own a business, maybe you're an entrepreneur, maybe you've been dabbling in trading for a while, maybe you have a career, maybe it's an hourly pay, maybe it's a salary. But whatever your time breaks down per hour, let's say on average you make something like $20 per hour. If you spend like 100 hours trading throughout the year, you do 100 times 20, that has been your cost. That's a lot of money, not to mention the fact that if you lose money live trading in your first year or 2, that's another cost as well. That's why it's very important to know the proper way to structure things whenever you're going about learning trading. So if you trade less, generally speaking, even if you just make the same amount of money, right? You take high quality trades and you just risk more on those trades than you would otherwise. Your decisions are way more clear. You pay way less fees and commissions. You get more dollars per hour, assuming that you're profitable. You make more money per hour that you're spending trading, and it's just 100% the way to go, in my opinion. It's just trade less and just take very high quality trades. Generally speaking, on the higher time frames, like the 4-hour and the daily chart. And by the way, if you want my help doing this, you can click the link below and book a call with me. If I'm not available, my team will take your call. And what we'll do is we'll try to help you structure things in such a way that can allow you to build a really, really simple trading approach where you don't have to do a lot of guessing. You don't have to play a lot of mental gymnastics. You don't have to be obsessive over every single little detail. Me or my team will show you exactly what you need to do to actually just get and stay profitable. And I think it would really help you. So if you're interested in getting my personal help from me and my team, just book a call below. I'd be more than happy to get on a call with you and kind of help you implement all this stuff. So let's go to the next thing right here. The next thing is you can be right and still lose. This was one that really hurt me a lot. And you probably noticed the same thing, how you're right about a particular outcome, right? You think price will move, for example, off of this support zone, maybe up here to this next resistance zone where the highs are. And so what you might do is you might buy somewhere around this zone, right? Say it comes here and then you buy. And you have a stop loss below this zone and you have your target, say, up here. And then what happens is after it goes into profit, you then move the stop to break even. And then price comes right here and then stops you out at break even. What's even worse is that, say you move your stop into profit, right? Say it goes into profit up here and then you move your stop loss into profit. Now the price can come back and stop you out in profit. And then if it ends up going to your final target, well, you still lost all that potential profit, right? Even if you made a profit on the trade. Say you risked $1,000 on that last trade and it comes out to only be like maybe a $200 profit because it stopped in profit or at break even or something. You've lost out on all that potential $800 of further upside, right? Because if you're entering a $1,000 risk and you just close the trade at a 1-to-1 risk reward ratio, you can use higher risk reward ratios too. It doesn't matter. It's all based on the context and experience anyway. But you're missing out on potential profit if you're getting stopped out on trades at break even or getting stopped out in profit when there's still potential upside for the trade to play out to the final outcome you think it will go to on the chart. So for example, just moving from some support zone to a resistance zone. And knowing that you can be right and still lose is really frustrating, right? It's also very frustrating where, let's say you're selling here at this resistance zone. You think that, price is going to be here at resistance. And so what you do is you sell, and then as price starts going into profit, you just set your stop really close, like just above the recent highs. This is something I see happening all the time with newer traders. Price goes into some profit, then it comes back, it stops you out, then it goes in the original direction. So, you were right about this outcome here, price moving from this resistance zone down to the next support zone, and yet you still lost, right? So the fact that you can be right and still lose, what this inspires you and motivates you to do, it gives you a real incentive to start focusing on positioning yourself in such a way where you have a good risk structure, okay, at least a 1-to-1 risk reward ratio, if not 1-to-2 or 1-to-3, depending on the context and what's reasonable given the situation that you're seeing there in the chart. And then it allows you to structure things in such a way where it guarantees that you're going to make more money long-term than what you lose long-term, right? Because you have to make more money on your set of winning trades than you do on the basket of all your losing trades. And as long as that's true, you make a little bit more money than you lose long-term, you're a profitable trader. And again, this is very, very simple to do. It's not really particularly difficult, but a lot of people, they're so risk averse, and this is a perfectly normal human biological emotion for us as evolved apes here on Earth. We want to desperately prevent losses. And so by you doing interesting stuff like moving your stop loss closer or into profit or tightening it up, all it does is it reduces the likelihood that that final outcome will be allowed to come to fruition with you still in the trade. And thus, you could still be right about a particular outcome. You could still be right about price moving from one location to the other, but you can still lose. So a big portion of this is ensuring that for one, you're positioning yourself with your entries in such a way where if price bounces or continues at that particular area, then you're able to still make a profit and capitalize on that final outcome without running the risk of the market taking you out of a trade that really you should probably still be in. So this is something I can help you with as well. If you book a call, we can talk about this. If this is something that you're struggling with, oftentimes it just comes to like increasing your stop loss distance just a little bit to allow yourself to profit from the final outcome. And you can always close early, right? You can manage dynamically. You can close early in loss. You can close at break even. You can close in profit. You can do those things dynamically. But a lot of this stuff just comes from visualizing what you think the final outcome is going to be, and then ensuring that your beliefs about the outcome reflect your actions, meaning getting into a trade, having a stop at an appropriate location and a target at an appropriate location. So again, you could book a call with me below if you want more help with this thing too. So the third one, very, very frustrating. A lot of information doesn't necessarily guarantee advantage. And I think a lot of people really struggle with this because it seems intuitively true. And again, this is maladaptive and it's just a fallacy, but it seems true. It seems true that if you do more analysis and you get more information and you look at more time frames and you look at more indicators and you examine more fundamental context and you look at the economic calendar and you put together all these connect all these dots, right? You've connected like 10 little dots trying to figure out what you think price will do. You could have the most information and what you think is the best possible trading idea, and it could still fail, right? Because trading is a game of statistical probabilities and ensuring you profit more than you lose long term. And so because of this, you might find yourself just obsessive compulsively, schizophrenically doing all this crazy analysis, trying to connect all these perceived dots that you think are going to help increase the likelihood of you getting a winning trade. But you really do get diminishing returns on that. Now, if you're blindfolded trying to predict where price will go, and then you take off the blindfold and just look at the chart, that probably gives you a little bit of an advantage, right? A little bit more information, like you're just visually looking at, okay, here's the chart, here's the support resistance zones. Price might move up, it might move down. Let me wait for such and such to happen, and then I'll enter a trade. That'll give you an advantage. Now, if you take that, looking at the chart, and then you combine something like simple support resistance and saying, okay, last time price was here, it bounced. So if it bounces, if it starts getting there and bouncing again, I take a buy, I might be able to profit from it moving off the zone. And then vice versa, right? So it comes to bounce, that's one setup, but it could also break and come back and retest. And then if it retests the zone, it might bounce and continue downward along with like the set of like lower highs in this case that might be forming a new downtrend. And that could be fine. But I'll point out here that past a couple little basic things, like for one, just, not being blindfolded while you trade and actually looking at the chart. You can look at the chart and use a couple simple things. I only use support resistance zones. And if you look at my charts, like it's black and white, right? I mean, the chart, the background is black. The candles are all white. I don't use different colors to look at bull candles or bear candles or anything like that. It's as simple as can be. It's just black and white. Because I have simple trading setups, simple opportunities. It takes me about 5 to 10 seconds to see whether or not a trading opportunity is there. And then I go to the next pair and I just set my alerts and I wait. You can see this right here. I'm waiting for price to get up into this zone, because if it gets up into this zone, then what I can probably do is look to find an entry and see if price looks like it's going to bounce by using like combination of the 4-hour and daily time frame. And it's almost no work, because really I only have to look at the chart once every couple hours. And on the 4-hour chart, it's once every 4 hours. I just look at the candle closures. And so it's not really a lot of work. So I spend most of my day just going around, just messing around, walking my dog. Sometimes I put like a podcast on. I go to the gym, work out for like an hour or two, do some sauna, hang out. Sometimes I just hop in my car. I just go to the grocery store, or I go wash my car. I got a couple really nice cars, and it's really fun to just like get out and be free. And then while I'm out and about doing whatever it is I'm doing, right, I've already done all my analysis in the morning right here at my computer. I just sit here, I sit down, I get a cup of coffee, and then I do all my analysis. I set all my alerts, and then I just wait. And you really do get paid to wait in trading. And so when I get an alert, let's say I'm out and about doing something, I'm at the grocery store, or I'm having lunch somewhere and just chilling. I could get an alert say, hey, look, NZD/USD is at the zone that I thought it might bounce at. And so generally I've already structured the trade and the risk structure. And let's say it's just something like this, an entry there at the zone, a stop above, and a target here of a 1-to-2 risk reward ratio. So price just makes a lower low and continues its little downtrend. This would hit the profit target. Then all I do is I get the alert, I place the trade, I make sure that I'm risking the appropriate dollar amount on it that I want to risk, and then I just let it play out. And doing this, this has made me millions of dollars over the past few years. Again, not only a Forex, but when you combine stocks and crypto, like this very, very, very simple methodology of just waiting for price to get to areas, buying or selling slavishly, putting a stop on the other side of the zone, setting a target somewhere where I think it's likely to go. You know, I don't win every trade, of course, right? I'm only right about maybe 60 to 70% of the time. But on the ones where I win, I just make a lot more money when I win versus what I lose when I'm wrong. And again, we teach all this in our coaching program. We have like one little core video content in the module. We're going to be adding more pretty soon there at MFX Mentorship. But again, if you're wanting to figure out how to structure this a little bit better, just go book a call with me or my team. There's the link below in the description. You literally have nothing to lose. Worst case scenario, you get some value on the call where it might kind of help you like structure things a little bit better. And if I could at least help you do that, like, you know, my job's done. I'm just trying to be able to help you be able to make a little bit of progress in your trading journey and avoid these horrible like fallacies that I've run into that I found over the course of the past few years, because they are really quite literally a paradox. So a lot of information doesn't guarantee advantage. All the information I really use is just support resistance combined with a risk structure that makes sense. That's why I've been saying for like the past 7 years that I've been teaching that all you have to do is just keep things simple and control risk. And if you do those two things, things can remain very simple, consistent, sustainable. And also it guarantees you're never going to have a huge loss that wipes out all your trading capital in one trade, for example. So a lot of information does not guarantee any advantage. And as a matter of fact, I think that the less information you look at, the more predictable your trades can be. And the more predictable that your trades can be, from what I've seen, having worked with over 4,500 clients over the course of the past 7 years, it generally produces better results. Now, trading is really risky, and most people do, in fact, lose money. So I can't guarantee you anything, but it's just something I've noticed, not only in my personal trading, but in the results of trading, having worked with thousands of people. So again, if you want my help doing this, just click the link in the description, book a call with me or my team. Be more than happy to help. And I hope this video was helpful. If you have any more paradoxes that you think are very interesting in trading that you've learned in your trading journey, put them in the comments and let's start a little discussion. Let's talk about it. I really want my channel and the comment sections and everything to be really useful, not just to you, but to everyone else who comes in and consumes all the content, watches the videos, and reads all the comments. So put below in the comments if you think there's another paradox that maybe I've left out here in this video that you think is very interesting, that you think might be able to help other people avoid that pitfall. I think that would create a lot of value for everyone else, and it might even help me make a new video on it sometime. Because the whole purpose of me uploading videos here on this channel is to be able to help you get profitable trading, help you avoid a lot of the mistakes, and focus on a lot of the things that are worth focusing on. So if I'm able to help, then, you know, I'm more than happy to, and I'd love to have discussions with you guys in the comments. So with that being said, if you enjoyed this video, great. You know, if you liked this video, that's amazing. It helps my channel a lot. I'm not going to ask you to subscribe or do anything in particular, but if you want to, if you find my videos helpful, then the subscribe button's there. You can do it. And I will see you guys in the next video. So have a good one. Cheers, my friend.